Welcome, Lisa. Good to have you back on
Hi.
the show. So many questions for you, but I think the main question now is kind of what is going to happen to Sam Bankman-Fried. And I think the biggest question here is the jurisdiction question, right? Because FTX was not a U.S. company. It is in the Bahamas, but there are definitely a lot of experts out there saying that this could fall under U.S. jurisdiction. So I guess the first question is, what are the chances that the U.S. will have a case against Sam Bankman-Fried?
Well, thank you. It's great to be back here. And but the fact that bankruptcy was filed in the U.S. means there's going to be U.S. jurisdiction. Bankruptcy courts have a method through which examinations can be done, investigations can be done into potential fraud or any kind of conduct by the debtor. But the doors are thrown wide open. If there weren't any other way to get this into U.S. jurisdiction, that did it. And, it's interesting that they chose to file in the U.S. I understand, the U.S. has a very mature and well-run bankruptcy system, but it did open the door. So the fact that you were organized in Bahamas and you had, the bulk of your operations offshore, yet chose to file for bankruptcy in the U.S., you want the U.S. to take the lead. That's what you're inviting.
And Lisa, if you could just break down for us, because there's so much information out there, what exactly would be like potential criminal charges against Sam Bankman-Fried? Again, potential if they are raised, because where's the line between sort of criminality and just sort of like bad judgment, mistakes? I mean, what would be the actual charges like for, if he were prosecuted in the United States?
That's an important line, because there are fraud charges that can be brought, and there are lots of charges that could be brought by civil agencies, but the criminal charges are, the elephant in the room. That's what any defense attorney is going to be focused on, and that's what everyone's, kind of wondering about right now. Those charges don't have to be the type of fraud that we think about. It basically can be a misrepresentation or omission, a failure to disclose information that would be material. If this is deemed an investment product, so we would need U.S. jurisdiction then. So a statement or a failure to make a statement in the U.S. That affects trading or investments in the U.S. The fact that there was lending going on between the customer side and Alameda is not something that was disclosed, to my knowledge, and that is something that would very likely be of great interest, I think, even to the venture capitalists who maybe didn't know about it.
Lisa, that raises this other question. Is that we've had many different regulators on talking about the regulatory gap between in the crypto exchange markets, because spot markets aren't regulated by any one entity so far. It's not the SEC, it's not the CFTC, it's its own thing. And there's a question as to, my question with it is this: is it actually illegal for an exchange, a crypto exchange, to run a prop desk, to run a hedge fund, and even to front run its own customers, given that these things are not regulated?
That's an excellent question, Lawrence. It is possible that this survives, or that this conduct dodged all legal strictures. But I doubt it, because no matter what, even if it's not regulated by securities law or by commodities law, there are all kinds of general anti-fraud and anti-deceptive trade practices laws out there that can be enforced, criminally, and that can be enforced via civil agencies. So, the Federal Trade Commission often does investigations, and those investigations lead to criminal prosecutions. So I wouldn't say that just because there's a regulatory gap, there will not be findings of illegality. I do think it's interesting that that there is this gap, and folks have to realize that we have a securities industry regulatory system, and these kinds of things tend not to happen. Now, Bernie Madoff aside, there are controls. Go ahead.
These aren't securities, though, and not only are they not securities, but this is an unregulated market for now, and as such, what exactly is the law that would have been violated if Alameda, in fact, was commingling its accounts with FTX? Aside from the certain very specific rules on it, but ultimately, is it possible for an exchange to run a prop desk, a crypto exchange to run a prop desk and to front run its customers? Is there anything illegal about that, given that so far we have not deemed most tokens to be securities, though they're not exactly commodities either? Gary Gensler says he thinks they're securities, but they're not traded on, they might not be traded in this situation. So if they're not securities, what's to stop an exchange from running a prop desk to front run its own customers?
Well, let's think about this in terms of what if it were gold and FTX were just set up in the Bahamas and trading gold? We have to look then to see, would those statements, would those representations that he was making about the type of trading that he was doing run afoul of general fraud or other law that applies? Let's say it's, we're not looking at securities at all. It's possible. Look, he solicited investments, he obtained investments from venture capitalists. So
to be sure, it's about his statements and not the actual act. In other words, if he went out to the market and said, "Look, I have this hedge fund, and I'm going to front run you," that would have been legal,
right? And that might even be legal.
Okay.
In lots of different contexts. I mean, there's a lot of crazy.
Well, at least we have him saying, I asked him at consensus whether or not he was front running his customers. He did say no. So, that statement is out there. And speaking of statements, Sam Bankman-Fried can't seem to stop making them on Twitter. He had quite a thread in development over the past couple of days. Latest saying, to the best of my knowledge, as of post November 7th, with the potential of errors, Alameda had more than assets than liabilities, but not liquid. Alameda had margin position on FTX International, FTX US, had enough to repay all customers. Not everyone necessarily agrees with this. I mean, should you be making these kind of comments, Lisa, if you have several criminal SEC investigations after you?
I think not. And I am sure that his lawyers and all the lawyers involved in this case are apoplectic right now. This is absolutely something you do not want your clients doing.
And I'll just show up at the follow-up. So he also tweets a few weeks ago, FTX was handling about $10 billion a day of volume and billions of transfers, but there was too much leverage, more than I realized, a run on the bank, and market crash exhausted liquidity. So what can I try to do? Raise liquidity, make customers whole, and restart. Raise liquidity? How's that even possible? He's not the CEO of the company anymore. I don't know who would be willing to invest in FTX at this point. Right.
Does it make sense to, do you solicit investment from as a bankrupt entity? Hertz tried. Remember, they tried to issue securities in the middle of a bankruptcy. So it's always possible. I mean, what he's saying is, we need money to straighten this out. He's trying to set this up as a Lehman Brothers sort of issue where we have the assets available to cover all of our liabilities. It's just that they're long-term assets, so we can't monetize them right now. They're not liquid. I don't know that that's true. it's entirely possible that there aren't enough assets there. And so that we're not a Lehman Brothers sort of situation. We're much more, maybe not an outright Bernie Madoff, but we just don't have enough assets there. That's the essence of, filing a bankruptcy. Now, to be fair, you can file a bankruptcy when you just are short of cash. So it's not it's not a complete determination that filing bankruptcy means that you don't have enough assets. You just might not have enough assets to pay your current liabilities.
So, Lisa, there's a lot of talk now that, okay, things are not going to be the same after this and there's going to be a regulatory response. Could you explain to us just sort of simply, in your opinion, what do you think is going to be the result of this? I mean, in the U.S., for example, like if there is some sort of response, if there's new regulation, what would it look like?
This could be the event that spurs Congress to do something, but I'm not sure that it will be. I have serious doubts still about whether Congress wants to step in and do something rather than letting the SEC and the CFTC and others figure it out. This is complicated. We are in a very divided political world right now, and who really wants to stick their neck out? Look at how much work SBF was doing to get someone to step up and get regulation done. And now it's all fallen through. So isn't the next, for members of Congress to stand up and say, oh, no, here's what we want to do. They're going to have to be listening to somebody. They can't just figure this all out on their own. And whoever they're listening to, unless it's the SEC and the CFTC and someone they really trust, I think this creates a bigger mess.